So with the changing lending environment, rising interest rate environment, terms on contracts are changing a little bit. We're seeing a little bit less hard money go down on contracts. How does that affect kind of the leverage or negotiating power you have on some of these deals?
Yeah, I mean, when you first, let's say a year ago, a lot of these deals you're going 500,000 day one, and if you ask for anything during the contract, the seller would just look at you and say, "No, I'm not going to do that." So, hey, can we get on the property and take a look at something? No, sign the contract, put up the 500,000, send it the title, and then we'll start. And so, at that time, you pretty much had no negotiation power because there was 20 guys in line. If you didn't want to sign the contract for $500,000 down day one, there was somebody behind you that would. But now that the market's changed, it's a lot softer. Not as many buyers in the market right now, and so you have a lot more flexibility. So I'm seeing people put down 50,000, maybe 100,000 day one, or maybe after an access agreement, maybe taking a look at the roofs, the interiors, then they're putting money down. So people are getting a lot more flexible in terms of sellers. If you can get to the price that the seller wants, you're getting better terms, right? So, one of the sayings in real estate is, you name the price, I'll name the terms, or vice versa, right? So I think right now, people are getting to name their terms on these contracts. So we're seeing a lot more access agreements, a lot more money going hard, maybe after 30 days, seeing all the due diligence. And the main reason is people don't really know if they're going to be able to raise the equity, where their debt's going to come in. So there's just a lot more contingencies.
Uncertainty in the market.
Yeah, a lot more uncertainty. And so a lot of people, they have trust that Fannie and Freddie are going to be here to finance these deals. So I think there hasn't been any financing contingencies quite yet. But when there's been so much volatility in the 10-year treasury, that could move your rate like 100 basis points. That's giving people a little bit of a pause because the increase in interest rate can also drive down your leverage. And so when that happens, it can be difficult to get a deal done. And so people are having more contingencies right now.